So you've bought here, right? And you've held, and you are here. You're here now, right? That's where we are. You'd have made a lot of money, right? That is a really big number. Let's see, 7,000, 20,000, 1,002. So you'd have made 2 million, over 2 million% returns, right? Because if you had bought here, for example, in 2013, you'd have only broken even after 1,200 days. So you would have waited a very, very long time in this bear market. However, what this course is going to do is to help you avoid buying here. Hello and welcome back to Pater Crypto Academy, the #1 place for Crypto 101. So today we'll be looking at how to analyze the markets and why analysis and psychology are the two most important things to know and understand in a market more than buying and selling. Okay, so over here we have TradingView. It's a platform that offers very many different markets and their charts. So today we're focusing on crypto. I'll be going on the crypto tab. Here we have launch charts. This is Bitcoin divided by the US dollar. And I'm going to quickly explain what this is. So currently we are on a linear scale. So this just shows Bitcoin just kind of basically in a linear fashion, right? But it can be difficult to analyze something like this because it looks like nothing happened for many years, when in fact a lot happened during this time when you really zoom in and see that actually there was a lot of price action. So what I'm going to do for this video is go to the log chart, right? It's this little tab over here, log scale, and look what it does. It shows us everything in greater detail. Basically, it takes the prices of Bitcoin and uses a ratio to kind of put things in proportion. So before that, you'd have thought that, let me go back to linear. You'd have thought that this move here was smaller than here on the linear scale. However, this was an 80% drop, whereas this drop was only 55%. So to remove that subjectivity, I use a log scale. Now we can see more clearly that actually this move here was much greater than the move here, right? And over here on the left, we have the monthly. So this represents that every single one of these candles, call them candles, of price action is 1 month, right? 1 month, 1 month, 1 month. And the green represents when price starts here at the bottom of the green candle and ends at the top of the green candle, indicating that price moved from, zoom in, it moved from this low here to up here, and this is where the monthly price action ended. Similarly, with the red candle, it starts at the top. This is where price started and it ended here at the bottom of the candle with a minus 27% move. Okay, and then we can see that we have many different time frames. So we can go to the weekly, where now every single candle represents weekly price movement. We can go to the daily, and again every single candle now represents a day. It's more of a top-down analysis. So you start by understanding, okay, what is Bitcoin been doing for the past few months? So this chart goes back all the way to 2011. I'm going to go over here to the left tab. This tool over here is called a trend line. There are other options here, but we're going to focus on just the trend line and take it from the bottom to where we currently are, or I'm just going to put it here to the COVID bottom, and I'm just going to leave it like this. And what this shows in general is that buying near this trend line here, you can see here, even this one here, here, and even here, your average price would have been up, right? So we can see that in the very long term, this is since 2011. This is a very, very long time that you can see Bitcoin has generally been trending upwards, ignoring all this up and down volatility, right? But here at Crypto Academy, we like to take advantage of the volatility. However, if you do the same thing and you avoided these downfalls, so you'd have and then sold here, and if you add those up, you would actually have made more money than riding the volatility like this. So now I'm removing the trend line, and I'm going to show you why I believe levels trading the levels is much more efficient than trading candles, right? So there are a lot of tutorials out there that teach how to read candles, but I believe that's very subjective, right? So for example, by the time any of these candles, right? Let me just even zoom in. This is, I'm still on the weekly chart. By the time this week began here and closed here, you'd have already missed out on a ton of price action, 10% move, or if you actually bought it at the bottom, you'd have missed out on 20% of the move. And then I guess you'd have been fine for the next few weeks, 1-2 weeks, made some money. But I'm gonna show you another example here. If you always waiting for candles to kind of give you the signal. So for example, over here we can see in the weekly, this is called a bearish engulfing candle. So when something engulfs something, it's well, it's bigger than the last one. So it's called a bearish engulfing candle because here you had price action going up on the green candle. Then you had a week where the price starts here and ends far below the green candle. So for a lot of bears or people who would have believed price is going lower, they would have taken this as a signal that, oh, we have just taken it off this low and closed below, and they would have started selling here. And look what happens just a few weeks later. The price goes rocketing up. So here's another example of why reading candles is very unreliable. So we can see here again, you had a bearish engulfing. And yes, this time if you had sold, you'd have made money. However, by the time you have confirmed this candle, you would have already lost 25%, 26% of your portfolio already gone. So in a short thesis, reading candles is a delayed form of information. You have to wait for the week to finish to get the weekly candle. You have to wait for the day its price action to close to get the daily candle. So how can you analyze in a more efficient manner? So I'm going to show you how to analyze using levels rather than reading candles. So the three main components in my style of analysis are price. So again, you can see what is price telling you, right? So in a simple way, you can use the general levels to see what price is telling you. So here's just another subjective trend line showing you where the lows were, and then you're like, okay, here's another low. It's higher than the last low, meaning that buyers have decided that no, this is low enough. We are willing to buy at a premium compared to just a few months ago. Similarly, with the high, you have sellers here saying, okay, no, it's enough profit. And here it was a little bit higher. The buyers thought that there was a bit more value. Okay, that's just a simple way of looking at price using levels. So the second component is momentum. To judge momentum, you're going to come over here to the indicators tab, and a very basic indicator is called the RSI, which is called the relative strength index. And it's a momentum indicator. You can go here and read the description to get more detail. But basically, it uses a whole lot of metrics. It uses volume of buying, volume of selling, and the rate at which that is changing, right? How many people are buying compared to how many people are selling, and how quickly they're doing it. So momentum is very important. So you have the price, right, telling you one thing. You're like, okay, since COVID crash over here, we've had a general uptrend. Okay, that's fine if you buy in those zones. But what we're trying to do is to know when price action is actually what we call undervalued, right? You want to buy when an asset is undervalued and sell when it's overvalued. So here we have the RSI, a momentum indicator, and each asset has different ranges in terms of what is the top, what is the bottom. So for Bitcoin, I'm just going to go back to all the way back to 2013 and use a trend line for this, right? So here's the top, and I'm going to go to where we are right now, right here, right? And then similarly, the biggest bottom is here, and I'm going to do this as well. I'm going to make this one red. Nope, I'm going to make it green as a buy zone, and I'm going to make this one red as a sell zone. Okay, simple. And then you can obviously have levels in between that. However, but this is the long-term general trend of Bitcoin. If I go to the monthly, you can see that this is where monthly tops have typically reached, right, within this region over here. You can see right here. So here, over here, and we got pretty close over here as well, right? And then on the monthly, you can see the bottoms are actually higher. Alright, so here's another trend line. Should be another buy zone. So going back to the weekly, we can see that we also have different levels on the weekly, because the weekly gives you more detail as you expect. And on the weekly, you have even lower buy zones. So in general, buying in this zone has proven profitable for Bitcoin in the long term. So we can just quickly back test this and see what would have happened. So here, if you bought within the zone, you don't need to be perfect, right? You buying in this critical again RSI momentum indicator, showing the momentum here is very, very low, right? It's low here again. So we can even go back and see in 2015 here, 2014, 2015, you were buying this range, right? Yeah, there's a lot of volatility. There's a lot of volatility. Even from the first bottom here, you can see, right? We still went lower, right? But we closed like 30% lower. However, you're buying this general range, right? Let's see what happens once it comes out of there, which is here, right? When it crosses this green line, you'd have made a humongous amount, 8,000%. So stomaching this 30% volatility, you'd have made 8,000% buying this general range. Similarly, here you can see 2018, you can do the same thing. Let's say you bought here, right? You bought here, and then you went to another minus 21%, and it feels like the worst decision ever. However, if you wait and you see until we cross back up over here, which is here, you can see that again you'd have made over 1,400%, right? Selling in this red zone yet again. And again, you can see here COVID crash, similar thing. Buying within this region here, you'd have made a lot more gains just buying in general without even picking the perfect bottom. You'd have, from here when it breaks out, again you'd have made 700%. And we've had a similar thing here, not as low as the others, but again a general range over here, and time will tell. Well, we can even see right now, if you had bought within this range over here, and that's over here, and then it finally broke over here, you'll be up 20%, right? 22%. So you can see, just as a general simplistic way of analyzing, using the RSI and knowing the levels at which when an asset is kind of overbought, right, where it's overextended. Again, you can have more detail on this, right? You can do your own analysis. You can see that, okay, here within this range you'd have been comfortable selling, right? So you're buying within this green range over here and selling within this red range, which would have saved you a lot of pain on the downside. So you're trying to avoid these big moves down by just buying here and selling here, just using a simple momentum indicator. So how do you make this even more significant, right? So I'm going to go over here again to the indicators and look for the RSI, the stochastic RSI. So what this indicator is, it's a measure of this indicator. And the reason for this is, in times where you're in these ranges, right? Let me zoom into this indicator. It can be very difficult to know exactly where you are in the greater scheme of things, right? And this stochastic shows you where basically, if you combine the stochastic RSI's in the signal with the normal RSI, you get a stronger signal. So here we can backtest this, right, very quickly. So I'm just going to start from here, right? So you have this RSI overbought, right? You have oversold here in the green zone, and then you also have the stochastic RSI also here in the same region, right? Really at the bottom, right? This is a zero region. This is showing that momentum is really stopped and very little is happening in the grand scheme of things, right? Similarly, it has a top over here in the 100% range, which is generally a good sell zone, right? So here we can see that here you'd have bought you see the RSI is in the green zone, you see the stochastic in the green zone, and boom, we go up. Same thing here, right? Green zone, boom, up, green zone, boom, up, green zone, and up, right? And we still pointed up. So so that's just momentum. The last component is volatility. So over here we have the BBWP, a volatility indicator. So when it's at these lows, volatility is actually very minimal, right? You can see that it's basically volatility is coming down. So you can think of this as pressure, right? So you have pressure in a balloon or pressure in a bottle that is slowly compressing itself, right? Compressing, and everything reaches a critical region where that compression has to finally explode upwards, right? So let's see what results have happened, right? So using momentum, so you're using general price, right? And like, okay, you can see the general trend of price to get a bit of a bias on what to expect. And then you also add that with momentum, right, which can show you before time. So for example, here you can see that momentum was already dying down long before this price action had its down leg. So this is why momentum is very important. Again, you can see that actually the stochastic was a leading indicator. It had already lost momentum long before, as you can see from here, long before we had this euphoric top, before price came back down. Similarly with RSI, right? So how does volatility add into this analysis? Well, in short, it gives you a signal whether or not something is a crash or a correction, or how quickly and how large a move may be, right? So we can see here when it's in the top range, price tends to move very slowly, right? When it's already in this upper 100% range. So you can see here, again, this is the weekly chart. Over here, you see that the volatility, even though momentum was going up, right? This is after the COVID crash. Momentum is going up, 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 up. It takes a very long time here in this region when volatility at first is just going sideways and then volatility coming down, right? So the speed and the magnitude of the moves is really small. So it's very slow. You can see that here that it actually took about, let me see into the bottom, right, until here. It took about 126 days just to get the price to move 170%, right? So that's a very long time. So volatility can help you with timing movements and also estimating how large a move could be. So here we have volatility, example volatility now expanding, right? So I'm showing you here and here, right? So I'm just going to focus on the easiest one to see. So here you can see volatility had come down and then it ripped up, right? So let's see what happens when volatility alongside these momentum indicators, you can see going up. Same thing on the RSI, going up, right? Let's see what that did for price. So here you can see again, volatility going up, momentum going up alongside it on both occasions, right? You have the RSI, which is a primary momentum indicator. Then you have a secondary indicator, and then the tertiary indicator. So it's like 1, 2, 3 in order of importance. So you have now here from this point here, the volatility was really at the contracted right at the bottom, and then you have it all the way to the top of the here, right? So I'm just gonna take it here, just to the top here of the RSI, just here. And then you can see that in only 84 days, we had a bigger move than here, right? 84 days, we had 270%, where here, when the volatility was coming down, we had, which took almost 200 days, you know, twice as long for half the returns, right? So this is why volatility is very important. So that takes us to today, right? We can see that we have a very interesting signal. So first of all, I'm analyzing the price, right? I'm like, okay, here are the levels, right? Levels, 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 levels. So I mentioned how drawing trend lines is very subjective and leaves a lot of room for error. So what can you do instead, right? So if I take here's another tool. It's called the Fibonacci retracement rule, right? So I'm going to go back to 2018, where we know for sure this was a cycle top, right, in hindsight. And I'm going to take the tool, right, from the top to the bottom, right? The bottom was actually here. The COVID crash actually was a correction. As you can see, that price was actually lower here in December 2018. So I'm going to do that over here, right? And I'm going to go to default settings because I have modified settings. So there we go. And it's important to use the same scale. So because I'm on the log scale, you have to put the Fibonacci on the log scale as well, so that everything is in proportion. I click OK and I lock it in place so that I can move it around. Okay, very simple. So now we see the larger trend, right? So from here to the bottom, we've actually hit a general top twice. So the bears had a point. However, if you want to get greater detail, you can you take the secondary tool, which is the Fibonacci based trend based tool, right? And you're saying, okay, so the move actually began here, right, at the bottom, and then we had the first impulsive move up, and then we had our retracement, which is over here. Now again, it depends how you like to measure things. Do you like to measure things on closure, or do you like to measure things on wicks, depending on how you trade? But if you're a long-term investor, you want to look for closures rather than wicks, right? Because a wick, it just wicks down for a short period of time, but the price really it doesn't close there. So on a closure basis, which is probably the proper way of doing it, again, settings, Fibonacci, it's on a log scale just like this one, and I'm going to leave this on black, and I'm going to lock it as well. So again, now you can see that after the longer term top here, we had periods of being underneath this resistance or support line. And you can draw multiple versions of this if you want to get greater detail. So again, if I do it from the wick bottom of COVID to our first impulsive top, and then our last bottom, you get a different detail over here. Let's see. Now you can see the levels a little bit more clearly, seeing where we are, etc., etc. So this is just levels, right? You can see you use this in conjunction with the indicators. So let's see what the indicators would have been saying. Again, using just RSI, stochastic RSI, and the volatility indicator. So let's see if there's confluence. So here we can see on my indicator, I've modified it to see where other overbought, oversold regions are. So here we can see price had here a capitulation. So it broke below this support line, and here you can see the same signal here on the stochastic to the bottom, and the same thing here on the RSI, right? So that's confluence that actually this was a really good time to buy, because things were really, there was too much fear in the market and people oversold this asset. And you can actually see a similar thing that happened over here as soon as we broke this 40 level, right? Now you can see a lot of confluence with this 40 level that actually is more 40.8, a very important level for us to keep. We may come down the next few weeks to test it, and hopefully we bounce out for the bulls. But if we do break down and we close a daily below this level, you can expect to see similar price action to here. So again, you can see over here we had it first of all breaking this level, right? Again, if you wanted to see it sooner, you would be on a shorter time frame. On the daily, you can see how well price respects this level. So you can see here, without being subjective, right? It had resistance, and then once it broke through, it went all the way up. And resistance in this general level, resistance there, better resistance there, support. It supported price, it supported here, and then it failed here, right? It failed here. Then we broke above it for a short while, but then we quickly failed again. Underbought again, oversold again. Good time to buy. In general, you can see now we're above it. So what we're kind of looking for is either we keep this level here, which has other more confluence with these tops here. You can see either we keep this level, this general level here as support, right, and bounce up, or what seems likely, according to these indicators, is that we'll slowly come back down to around 40 in the next few days, and then hopefully we make this support and then we go back up. But that's analysis in a nutshell. Please like, comment, and subscribe. If you want more specific videos, just comment in the comments below, and let me know if you want me to cover anything specific.